Today I want to talk about ranges. Okay, now I'm not talking about when the market is going sideways like this. This concept that I'm going to be teaching you is so important, and it will help you combine your long-term approach and your short-term approach. Sometimes I know it can be different, difficult, if one time frame's telling you, oh, okay, well, I guess this looks like a buy, and another time frame's telling you, I guess this looks like a sell. I understand that can be tricky, and so I want to make this video because it's a simple way that I like to view things that basically combines two main time frames. And it is just so powerful because it just constantly reminds you where you are in price. Are you high? Should you be looking more for sells? Are you low? Should you be looking more for buys? Because what you'll often find is sometimes you're low on one time frame, but you're high on another time frame. Okay, and so it's like, which one do you listen to? So this video is basically going to be talking about how I combine things. And for this example, I'm going to start off using the daily and then the 4 hour. And then as we kind of go down, I'll then use the 1 hour and, maybe the 15-minute or something like that. Okay, so let's just start on the daily here. And let's just move back in time here. Okay, so in terms of market structure, okay, we have to look at the market in a certain light. Okay, so let's just, is this the best example? Let's just go back here for now. Okay. At this point in time, I would mark out the daily range because we're on the daily from here to here. Now, this upward line up here, we don't know whether this is going to be the tip at this point, the top. It could come down and stuff like that. But for now, let's just mark it like this. Okay, now, if you notice and you're wondering how I'm drawing this, okay, if we've got market structure going up like this, okay, once we break out, this is a trading range. Okay, this is what I mean by a range. When it breaks out, now when price begins, if it begins coming down here, the range will change to here. Okay, it gives us basically the range that price is currently moving in. Okay, very simple. And so we can see here, if you don't find this very easy to see, although I'm sure by this point you do find it fairly easy to see, we come up here, we create a higher high, higher than this previous high, not this one, although it is higher than that as well, but it's not what we're looking at. And once we know this information, then we can cut down. Okay, and so it's important to understand the main reason that I'm marking out these ranges is because of the concept of buy low, sell high. It's like one of the most obvious concepts that people talk about, but what does it actually mean? Well, if we think about things like fibs, order blocks, what are the common themes? When they work, they're low in buy situations and you're selling higher in sell situations. Okay. The reason fibs work is not because they're magic numbers. It's because if you think about it in terms of just buying something at a market, if price is lower and lower and lower, you're basically just getting a bigger and bigger discount, expecting it to continue going in that direction or whatever. Okay, and so I urge you not to look at price in terms of, okay, this is a trend and blah, blah, blah. Just look at it in terms of the range. Because if you know the daily range, and then you cut down to the 4 hour and look at the 4 hour range, for example, here, let's wait and see, in case we can adjust this daily range here. So where's the 4 hour range here? Okay, well, I would do the 4 hour range here. Why would it be here? So it'd have the same high. Well, because it's this level, these wick areas that pushed up and made this higher high up here. Okay. So if you notice here, if price, let's say, came down here and we were thinking about buying, a lot of people, trend traders, and, they want to kind of have these big risk rewards and go up here. Is this the smartest move? Well, not really, because yes, you're buying low on the 4 hour, but in the daily range, you're actually buying pretty high up. Okay. And so the best risk reward setups that you're going to find are going to be lower when you're buying lower, when you're selling higher. Okay. Does that mean we just need to spank on a sell now? No, of course not. Okay. We monitor the range. Okay. And so we can begin to assume that the daily range has made its top when the lower time frame out of our two time frames, when the structure begins to break. In this case, when this begins to break. At this point, that's not a strong enough break. That is. Okay? So I hope that makes sense. Now, the 50% mark of the range, normally your higher time frame range is something that you need to pay attention to, the 50%. Okay? Because the 50% is the level where basically everything is kind of in a middle state. Okay, and so if you see a lower time frame structure break here, and you confirm that the daily the high of the daily range has been made, then you are allowed to sell down to the 50. But as soon as you go below that 50, as soon as you touch that 50, you then enter back into more of a buy bias, okay, based on the daily, or whatever your higher time frame is. Okay, and as you do that, you can then use all the other tactics that you would normally do. When you're looking for price to come in a certain direction, then you can mark out your order blocks, demand zones, whatever the hell you want to call them. And then then we can look for our original setup, something down here, for example. So we can see something like this, just as a quick example. Okay, so this will be fine just for this example. Let's just have a fairly decent stop below here, and then look to target, possibly the top of the daily range. Okay, something up here. Okay, now due to the size of that reward, and because of the size, we can probably account for a little bit bigger stop loss here. So let's just wait and see, and let's cut up the time frames to look at how that's performed. Okay, so it's in our favor at this point. And then we're going up and 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 up. Okay, now it's important, okay, that you realize that these big risk reward setups, okay, all it is, the only reason that it is going to do that and go in such a huge direction is because you are buying lower and selling higher. Look at the pressure here. Low, we push up. High, we push down. Okay, and so by combining the higher time frame range and the lower time frame range, it gives you incredible flexibility. Okay, let's look at a couple more examples. Okay, so on ORD CHF, okay, we could have okay, so daily range we can see here probably around here. Let's move that. Okay, because we've come up higher low, higher high, and so at this point back here, and it still is in fact the daily high. Okay, the high of the daily range. Now we cut down to our 4-hour again. Okay, and we see which level made this higher high here. We see that we've got this rough area here. Now, if we were to mark out to find our 50% range, you can just eyeball it if you want. We can see the 50% range is here. But we haven't broken past our 4-hour structure, and there isn't really much room to go down here anyway, maybe 20 pips just to get to the 50% mark if there was a sell opportunity that you were looking for. Okay, but you might just be someone who just likes to wait, and that's absolutely fine. Wait, trade in the direction of your higher time frame, range, and that's absolutely fine. Okay, but if price had come down and broke down to the 50, then anywhere below here, you can mark this as a kind of green territory if you would like, if that makes things easier for you. And then basically, this would be your kind of red territory here. Okay, because when it breaks down here, it's broken the lower time frame structure down to the 50 until it becomes more of a buy zone there. That doesn't mean you just buy at the top of this zone. It's just a way of visualizing, right? Okay, this is where I am in the daily range. This is how I figure out where I am. And then you can kind of make a calculation based on what the best target is and stuff like that based on that. Okay, so let's just use a different example now. So for this example, let's use the 1 hour as our basically our time frame, or whatever you want to call it. Okay, so let's go back down here. Okay, and let's see, our 1 hour range would be from the lower high to the lower low. Okay, but we don't know this is the low yet, could come a little bit lower. We cut down to our 5-minute as our lower time frame. We can see the structure has kind of begun to break already here. If we get a bullish candlestick, maybe even a liquidity run below old lows like we've got here, potentially we could see price come up. Okay, and so we're just combining some pretty basic concepts here. Stop, fairly safe up to about the 50%, and if I eyeball it, that's about 50%. Okay, heading into Asian session now. So to be honest with you, not expecting miracles. But as we come back up to that 50%, now we're in more of a sell structure for ourselves. And then we can begin to look, right, okay, so we're relatively high in this overall range. Are we going to get something that maybe symbolizes that we might see some downside movement? Okay, potentially something like this. Do we come back up? Do we present an opportunity? Potentially this could be an opportunity up here, maybe target down here. You know, again, if you would like to target down here, there's nothing wrong with that whatsoever. Okay, and again, that doesn't mean this is going to hit top stop loss or take profit. It really doesn't matter. Okay, and if it makes you feel safer at this point, just break even at a 1-to-1. Okay, and then just let the rest run. Okay, because again, something might happen like that, but at least if you're at break even, it's either going to hit break even or it's just going to give you a sweet risk reward. Okay, and again, if you prefer high probability, go for just a simple 1-to-2, something like that. Okay, again, it's going to be totally up to you how you use this. Okay, remember, we're just combining all of the things that we know with ranges. Okay, and learning about how the daily range and whatever your higher time frame range is can be used for any time frame that you want. Okay, and as you get more advanced, you can combine more than 2 time frames. You can have the daily range, the 4-hour range within the daily range, and then maybe the 15-minute range within each of those. But generally speaking, that is why, you know, lower time frames are considered a lot more difficult, especially by, you know, bigger players in the market, is because you have to go back and you have to have all of these. It's basically more information to digest each time you go down the time frame. Okay, and so essentially what you want to be doing, just to kind of keep it super simple here, is if we are going up, okay, and we have our range, okay, so our range here, and then we cut down to our lower time frame and we identify there's another range here. Okay, that's still, it's fine to buy. Okay, but we've just got to be aware of the fact that price may begin to come down in the overall range, and then we aren't just seeing this move as a just downtrend. Okay, we are looking at the overall range as well, being like, okay, we've broken out this lower time frame one, but then we come back into the higher time frame one, give us a signal, and then potentially come all the way back up here. And then combining this with what we've already learned about our specific entry and how we can come back to the areas of displacement, this is going to provide for very, very, very high probability. Now, of course, if you're going for 1-to-5s, 1-to-6s every single trade, obviously that's, you know, you're not going to have that big a success rate. You know, don't kid yourself, but that doesn't mean that you're not going to be able to get some and get some really, really good ones. Okay, so I hope that that's made sense. Now, I just want to give another example of this, and I want to just break it down because a few of you might remember this in the community. And basically, it's a little trade on Euro USD. Okay, now I just want to break down the whole idea of ranges and how I used it and how I kind of calculated this. So I started on the daily, okay, and quite simply, I saw that we were in a bearish daily range. By bearish daily range, I mean that there has been a lower low created on the daily, and then it's simply that range from that high to that low. Okay, now I've got the 50% marked on here because I know that it's bearish, but I know that more than likely when we do see lower time frame structure break, we will normally reach the 50 before anything else happens. Okay, and so basically with this information, I marked on the 50, I then cut down to a lower time frame and looked for just that, some bullish structure break. What do we see? We see a very nice structure break of all of these structural highs, and then where we come up, I was anticipating it would come up and fulfill that 50% just underneath it, and then overall I don't know how far up it will go before I eventually predict it to go down. But just see how I'm blending these concepts here. Okay, if I had my 4-hour here and I'd marked on my range at this point, this would have been my 4-hour range here to these lows down here. We break down here and quite simply we break and then anticipate goes up to the 50 and then hopefully get back down. So very, very simple, guys. Very, very simple. Do not overcomplicate it. It's just a range within a range. Okay, where are you in the range? Buy low. The ideal scenario is going to be when you're buying low in both of your 2 time frame ranges. Daily, you're at the bottom of a bullish range, and then the 4-hour, you're at the bottom of a bullish range. Okay, when 2 of them are different, it's totally fine. It just means that your target maybe shouldn't be so ambitious. Okay, this is quite an ambitious target considering it's counter trend, but I have got partial areas that I'll be taking off probably around here and at these structural highs up here. Okay, and I'll be going break even around where this is alert is, maybe a little bit higher up here. And just, yeah, so very, very simple, guys. I hope that makes sense. And yeah, see you soon.